Once you save tens of thousands of dollars on inheritance you receive from your parents, before you put a home in a trust to avoid capital gains taxes, you need to hear this. Here's the truth. When you inherit a home, whether through a TOD, transfer on death, or a trust, you typically receive something called a step-up in basis. What does that mean in plain English? It means the IRS resets the home's value to what it's worth at the time of inheritance, not what your parents originally paid for it. So if your parents bought the home for $200,000 and it's now worth $850,000 when you inherited it, your new starting value for taxes becomes $850,000. So if you sell it around that price, you may owe little to no capital gains tax. That's the part most people don't realize. It's not that it's the trust that saves you on taxes, it's the inheritance itself. I'm Amy Texter, and I help clients buy and sell homes throughout Ventura and Los Angeles counties in California. I also guide families through situations like this when inherited properties are involved. Now, this is part 1 of a series where I talk about handling inherited real estate. So after this video, please watch part 2, where I'll explain what actually happens to property taxes when you inherit the home. Now, let's clear up a big question I hear all the time. Should I do a trust or a TOD? Now, here's the simple breakdown. A TOD is simple. It's simple to set up, lower costs, avoids probate, but it also has some limited control. It can expire or be done incorrectly. Doesn't help if incapacity happens before death. A trust is more comprehensive, covers incapacity, gives more control over how assets are handled, but it also has more upfront cost. Needs to be set up properly and also maintained. From a tax standpoint, they generally are the same. Both can allow for that step up in basis, so the choice is less about taxes and more about control and long-term planning. Now, here's where things get a bit complicated. What if multiple people inherit the property through a TOD? Each person receives their share with step-up basis, but now you've got multiple decision makers. Do you sell the home, keep it as a rental, or buy each other out? And what happens when one person wants to sell, but the others don't? This is where I see delays, disagreements, and sometimes a forced sale. And here's the hidden issue. If the property increases in value while everyone's trying to decide, that increase becomes now taxable. So timing matters more than what most people realize. TOD versus trust, similar tax outcome. Step up in basis is the real advantage. Holding too long can create taxes, and multiple heirs can mean more complexity. Now, a quick disclaimer, this is just for general information only and not legal or tax advice, so you should always consult a qualified estate planning attorney or tax professional about your own specific situation. If you're planning ahead or dealing with an inherited property, it's worth understanding your options before decisions are made. Please feel free to reach out if you want help navigating the real estate side of this, understanding your options, or preparing a strategy to sell. If you're planning ahead or dealing with an inherited property, please do message me.